Welcome, everyone. Welcome to the Hurley Investments Market View commentary for Monday, the 16th of 2020. In all honesty, last Thursday, I did a trade findings and adjustments that was really low on the internet. And for whatever reason, it was not able to pick up the sound audibly as it was being recorded. So because that was not happening, I'm going to somewhat review what I talked about last Thursday and go over a little bit on that regard because I just didn't have enough bandwidth to record the audio coherently as we were basically trying to get my trade findings and adjustments. So let's go through today. I'm going to teach this as if I was teaching an 18-year-old that thinks they know it all. So that way you're going to see where I'm coming from in my life. And some of my comments might be a little flippant. And I'm just doing that because it's going to make me feel better. All right, last week the S&P rose up to 2.2. Even though we had our highest daily and weekly COVID cases, hospitalizations, I even think it was the highest death. Huge November for us. I would dare say it looks like Joe Biden has won the election, and it is a relief rally. I believe the markets know what they're going to get. I don't understand how they're okay with, for all intents and purposes, how they're okay with the higher taxes, because that'll offset any short-term stimulus that they think we're going to get. With that said, the energy sector had the largest increase. Again, I scratch my head. Under Joe Biden, do you think energy is going to take off? Feel free to answer. No, of course not, right? It's some of these paradoxes in the stock market that if that doesn't tell you plain and simply, you're not always going to know it. I don't know what ever will. I mean, plain and simple, there is no reason energy should be up 17.1%. Even if you look at what's gone up, it was primarily oils, which you kind of scratch your head a little bit, right? They're not going to give tax credits for oil. We're not going to frack. We're not going to look for cheaper ways to access oil. In fact, if anything, it's our energy dependence will probably go back to some other countries or OPEC. I would doubt we're going to be a next net exporter of oil. But one of those oxymorons where that's the biggest sector that was up last week. All right, where are we at? Crude oil futures jumped on the vaccine. Definitely the vaccine is going to be interesting. I wish you could hear Maud talk a little bit about the vaccines. Please don't think that it's going to be ready and available for everyone by April of next year. It won't. We will probably go through one more year of a COVID environment like we have it. The good news is I think wearing masks is going to be the new normal. I think we're going to be a little more conscious about our hygiene, washing our hands. And I don't know if that's a bad thing for the new normal. I'm going to say it's going to be a little bit disappointing because I like seeing people's faces. I like seeing beautiful people. With that said, Someone just said, we hope it gets better by summer 2021. I hope so. I think that's a little, I think you're going to find out that'll be a little, in my opinion, a little probably too soon. From what I'm hearing, there's not enough vaccinations going to be available worldwide. There's not going to be enough needles and so forth to syringes to administer it. And again, understand it should be a lot like a flu shot. So I don't know if vaccine is the right word to say for it. Maud, please jump in if I'm speaking out of turn or unknowingly here. But I do think it'll give the antibodies, much like a flu shot, to fight it and to fight it more effectively, especially if it gets bad. But I don't think it'll vaccinate you so that you won't get it because it's a virus. And Maud, again, if I'm saying any of that wrong, you are our doctor here to correct me. I'm not saying I'll read exactly what you wrote correctly back to everyone. Okay, I might. All righty, here we go. Something I talked about the other day, no reason that the U.S. can't ramp up production of needles and syringes. So I agree, but the problem with doing that is my brother works for a medical company based out in Dallas, and they're one of 100 that have 10 million needles and 10 million syringes to come up with, which is killing his business of selling these machines that they also produce. It's putting him out of work. He's actually out looking for a new job. And I don't know if they're going to have enough of the vaccine, even if I do the math and we're talking about 80,000 doses from, or 80 million doses, excuse me, from like 3 different providers, Moderna, and whoever we just had from last week that I can't think of the name. That's 240 million doses for an $8 billion pot, or 8 billion, 8.6 billion population. Pfizer, thank you, Maud. Pfizer was last week, Moderna's this week. There was one that was 2 weeks ago that they were talking about. There's just not enough for a world supply right now. It doesn't seem like there's even going to be enough, plain and simply, for next year for the industrialized world. Let me just put it that way. So it'll be interesting to see. It'll be interesting as it's distributed. It'll be very interesting on how it'll be administered to people. That's the short answer. So, and please, if by any reason I made the assumption that it was just because we don't have a way to inject it or get it to people, there's IV ways to do it. There's syringes and needles. I mean, we'll probably have a pill way coming up here in the near future. There'll be a bunch of ways to ingest the vaccine, to get it in you, to have it go to work. They just probably will not have enough of it to be able to administer to all the people. So it'll be pretty interesting to see how that happens. And again, Maud, any comments here, type them in and I'll make sure I pass it on to the group. I kind of wish that Dr. Gupta was here today. And Dave W is, never mind. There is someone that also is in the medical field that bring me information so I can pass it forward. Last week, I talked a little bit about trading and trading results. And I'm going to talk a little bit about that decision process. How do you guys make your best decisions in trading? I want you to think about that. How do you guys make your best decisions in trading? So David W types in there, I do my fundamental, my technical, and my sentimental due diligence. So correct. part of doing a trade should involve the preparation to I see a couple more here that I'm giggling with. You need to take ownership in what you're deciding to do. You need to do the preparation to justify your trade. And technical analysis is kind of funny because a lot of people want a 20% return, but if you look at the chart, you'll see that there's no way that you're going to get a 20% return, most likely based on support and resistance levels, based on past performance. Of course, past performance never guarantees future results, but there is a higher probability of looking at some of those opportunities or returns based on the past performance. I have flipping a coin, whatever Kramer says, I'm going to gag. If someone uses an advisory here, I want to point the comment out that there's a big difference in making the best decision and making a correct decision. You might make the best decision at that given time for a trade and investment, but that doesn't mean it was the correct decision when you get out of it. You might get out of it at a loss. And if you'd waited one more day, it could have been a profit. You might decide that you see something that 99 out of the last 100 times it worked, which means you're making your best educated decision at that time, but it doesn't turn out to be the correct decision because the 100th time that you tried it, it went against you. It's scary because when you manage money, the expectation is that you always have to be right. And believe it or not, because I realized I'm not always going to be right, I've got a couple choices there. I can throw a temper tantrum and act like a little child. Get all pissed off and you know, that usually then includes blaming someone else. I might take ownership, and I could lose a client because I'm going to show integrity and be honest. I might choose to say, you know what, the risk is too great and it's time to go look for something elsewhere. There are a lot of things that could be said, but I think there's a high level of integrity for understanding you're not going to get everyone right. You're not going to make the correct decision every single time, but you might have made the right decision at that time. Part of what I've done is I've made investing trading as simple as possible. And it's funny because as I was talking about that, the biggest part of making it as simple as possible, admitting when I am wrong. And then another idea is looking longer term. It's interesting because you need to define what you want to do. And for crying out loud, if what you want to do and where you want to get to is not in line with your advisor or not in line with your results, it's time to move on. Hold on one second. Everyone can hear me okay still? You guys all there? Everyone can still hear me okay? Yep. All right. Thank you. One of us is having a little problem hearing us. Okay. So part of admitting when I'm going to be wrong comes back to simple numbers. I'm a math guy, right? What is the probability of making money in the stock market? Someone give it to me, because you guys have all heard me tell you this in the past. What is the probability of making money in the stock market? Is the probability depends on the trader? That is not correct, Abraham. There is a finite exact number. We have 50%. We have 90%. I would like to see that one. But there's a finite number when it's making money in the stock market. And it really comes to a 1 out of 3 chance. You have a 33% chance of guessing the direction correctly. And I should say with stocks. With options, you can change it. Options is even lower because you don't have forever. It's about 21% for options, even on spreads. But if it goes up, goes the direction you want, you have a 33%. If it goes sideways or down, you have a 66% chance of losing money. Well, Kevin, I really don't lose money if it's just commissions or a couple dollars. It turns into a couple $100 if it goes sideways. But you're losing money. The reason why the stock market, the reason why gambling works so well is because the odds are stacked against you. And the odds are stacked against you in the stock market. Number one reason why people don't make money in the stock market, because the odds are stacked against them. And the second reason is they didn't give themselves enough time. Oh, 21. That is 27 years of experience telling you that. Learning from hundreds of experiences beforehand. But that is your simple probability of making money in the stock market. So once you can admit that to yourself, you need to define what your version of the stock market's going to be. Are you just in it for fun, for safe trading, for investing? I'm going to stick a new one in there. Living expenses. You need to define what it is. In all honesty, someone tell me if you need, I'm going to answer it two ways, but if you need $120,000 a year to live off of, what should be the minimum size portfolio you should have to live off of 120,000? It's a very simple number. If you need $120,000 to live off of, what is the minimum amount your trading portfolio should be? You need $120,000 to live off of. What is the minimum amount your portfolio should be? We have 1.5 million. We've got 5 million. We've got $400,000. How the hell did you come up with that, Dave? Give me some serious inquiries here, because it's a really standard, simple number for a money manager or a financial planner. 10 million coming in. Yes, Sorry, it's a typo. You said 4 million. It's not what you typed in. Both your commas for your zero, well, one comma for your zero wasn't there. You missed a comma and a zero. So here's an honest answer. The honest answer is, and getting back to defining, if you need 120K to live off of, you should have a $3.6 million portfolio. And how is that coming out? Most people, when they hit 65, they give them a 30-year lifespan, or to get up to 95 years. At 95 years, you're going to pass through the average lifetimes of a male and a female. That covers them. So that way, if you pull $120,000 out each year, you'll last a 30-year period of time. And at that point in time, you are financially free or safe. It's a very unique number, but when you look at all those, what is your number? Financial planner, how many years do you plan on living? You know, I'm going to live to 100. Most of it in their programs are at that 3.6 million, or 30 times is the magic number of your yearly expenses. Two great comments just came in. So they're not counting dividends or profitable stock sales. Another one just said, so they're not counting all the potential gains. So no, actually, you're not. Why are we not counting potential gains, dividends, stock sales, reinvesting? Why do they not do that? Great questions, though. Good comments, both of you. Why would they don't? Because you don't have a competent manager. That could be it, but that's actually not it. It's because they're counting some of those growth or gains or dividends as being your safety net for what you didn't count on. Safety net for health, safety net for heart attacks, safety net for helping a child, an emergency. Plain and simple, ideally, to think that you've made it, if you need to live off of $120,000 a year, you should have 30 times that in savings. As I've noticed for a couple people, even that doesn't seem to be enough because expenses keep increasing. Another comment, you probably should have your house paid off when you are going to be retired. If your primary asset is paid off, you're just paying your taxes or property taxes or what have you, I've noticed those individuals have a much higher success rate of retiring out of poverty. You need to define your version of fun in the stock market. If it's for living expenses, you know what? The stock market should never be fun for you. Are you trying to do safe trading? Are you trying to invest for the future? There's all kinds of comments there to be made. I put it in here last Thursday. You don't get an education in the stock market. You get a butt kicking in the stock market. Think about it. If you're building a bridge, you don't learn how to build a bridge while you're building your first bridge. Practical application is not education in the stock market. Don't ever tell yourself because you lost in a trade in the stock market, you've learned something. You probably haven't. You've got a butt kicking. You will probably make the same mistake again. It's human nature. You're always seeming to make your best decisions when you look at the information you have in front of you and you look longer term, because the longer term you have is a longer opportunity to get out of your trade or to get out of your investment with the profit. One of the biggest mistakes, and I had this talk with Keeve, some people never lock in or take a profit. Why? Don't want to pay the taxes. Now, I'm not saying you should overtax yourself, but you also shouldn't be afraid of cashing in a profitable trade because of taxes. That just doesn't make sense. Well, Kevin, what if I inherited, I've held it for 20 years, then you've probably already made the mistake. But you shouldn't be afraid of taking a profit. And yes, you're going to pay some taxes on it. And then reinvesting those profits or rewarding yourself. Now, I'm sure a bunch of you are listening to this going, oh my gosh, Kevin, I've never really heard it said that way. I don't know if I agree with you. I know Bill probably wants to give me an earful. Please feel free to give me a couple comments on this. But once again today, it was shocking as I had a conversation with an individual. He let me know that as he lost a significant amount of money because he was betting the opposite direction. Biden, you know, things should have gone to hell. I said, I know, I agree with you, but they're not. The market likes Biden. He's going to be our next president. He might make things easier with China, so we get Baidu to finally take off. But he thought from losing tens of thousands of dollars in the stock market, he was getting an education. And I asked him, what's going to stop you from doing that again? Well, I just lost $30,000. And I'm like, but you've done that before. Why didn't you take a profit? I didn't want to pay the taxes. You can take a $30,000 profit that might increase you a couple levels. You might pay a 10% tax on that. Boy, I mean, to make 27 grand net versus losing 30, I just scratched my head. It's childish and immature to think you're going to guess it right every single time. It's childish and immature to think you're going to pick tops of tops and bottoms of bottoms, even though we might have just done that on Boeing when we dollar cost averaged last week. The key is you capture a wave of the movement, whether it be up or down. Still different than spread trading because when you do it with a collar trade, you actually can wait for forever to get things to go back up. You have some amazing days like we've had last week and this week. But those amazing days, the days when you can see a $358,000 up day on 15 million, so that's what? 2 1/3% on a 1.6% up day. last week when we showed you the 4.13% return on a 1.18 or 19% day. That comes from the process of collar trading. Boeing on Wednesday is supposed to possibly announce that the FAA approved their planes. We might see a pretty good pop on Boeing back up to 250. But man, it's been a hard year and a half as all the crap hit the fan. At least you're not sitting in it waiting for it to come back on Boeing. If you've had the shares, I know there are 4 of you out there. Man, we've got 200 to 230% more shares of stock on Boeing. You're going to be ridiculously profitable. I was hoping to be ridiculously profitable on Baidu that just beat top and bottom lines. Doesn't look like it. Under Armour's one that you can knock it out big. It'll be pretty interesting. Rich showed me something, so I'm going to pull up a random portfolio here. Rich showed me something that I thought maybe you guys would want to see. For some of you that are using the old version of E-Trade, you sign in and you click on portfolios, you guys get this. I never use this. I always click onto the right box and open up Power E-Trade, but you get on this and someone said, Kevin, what are these cool little green arrows for? I was like, hey, it's a special event. And he goes, what's the special event? And I said, I don't know. I don't even see these green arrows that you have on this. So we looked it up and we clicked on Baidu, the special event, and the green arrow that's down there turned out to be for an earnings a date today. I was like, hey, the special events are earnings. But you know, you've got a couple more of these. Let's see what else it is. And so we went down and we picked up Micron. Hey, we've got another special event, another earnings, but I knew they didn't have earnings. And we looked at Micron, and Micron was, hey, in the next 5 days, you're going to have an options expiration. So I said, guess what? Not only is it options expiration, but it's also earnings. And I was thinking the special event would be a dividend payment. So I went down to Visa and clicked on the third one, and that's exactly what it was. That special event was a dividend payment. So for those of you that don't open up the other power trade and just go off of the old school stuff here, I don't know, it's just, you know, all listed out here. I'm trying to hide this individual's name and account number at the top. Those green flags are special events, and we know at least right now it's probably stock splits. It's probably earnings. Well, it is earnings, dividends, options expiration that week. So there are a couple things to look at those green flags, just so you know. We don't have any green flags here. They actually go to the symbols. Hey, there's some in the money options. You have a cash position, which is stock, options expiration in 4 days. Earnings with the big E there. It just shows it a little bit different. And D for a dividend payment when that's coming through. Pretty much the same thing, just so you understand. All right, moving on. Where are we going to end this week? I'm going to say higher. As we look at our markets, they're getting extended, which just means we're pretty close to being overbought, oversold. Last time this happened, we did take a dump down, just as a heads up, but we are now technically bullish. On the Dow. Just about touching overbought. We are technically bullish. You know what I'm going to spell there. Bullish. We are technically bullish on the S&P, almost overbought. But we do see that we've stayed overextended for a while. That does give me hope for a Christmas rally. You don't see that on the Dow in those 30, 32, whatever they are. And the NASDAQ is also bullish. So all three indexes are trucking away, doing good here. S&P, I still think will take some kind of drop down. We've never really had a 9.6% month ever. We've got holidays. I'll go a little bit higher. I'll maybe say we're going to finish at 3%. Wouldn't surprise me. Earnings this week, Baidu today. We had Kohler's, Walmart tomorrow, Lowe's, TJ Maxx, L Brands, Target, Nvidia are some big ones. Macy's on Thursday, Intuit, Ross Stores, Buckle, Foot Locker. We're doing a lot of the retail earnings. Economic reports, tomorrow's the big down economic reports with retail sales, capitalization, industrial production, business inventories. Be looking to see the economic reports move the futures in the morning. Wednesday, building permits, housing starts. Thursday, initial claims, continuing claims, leading indicators, existing home sales will move those. And then Friday, we have our monthly options expiration. November options will expire. Nothing internationally that I saw that I was willing to put anything in for this week. Really, we are letting stocks run. So the biggest decision now is how far to let stocks run into a Christmas rally. I really want to take some profits or lock in some profits so we have a great looking end of the year. Little bit of stuff I have in here. Candidates to run the SEC. I would dare say it's going to change. Please read this and you'll have an idea of how they're going to treat the Securities and Exchange Commission, how much harder I think things are going to get for those of us that manage money in the next 4 years. It doesn't mean it's going to benefit you guys. I think Dodd-Frank did not do hardly anything on the regulations that I went through that benefit you guys at all, to be honest with you. But there are some names that are thrown around in here that you should get used to so that you see what you have coming up and how they might tax dividends, how they're going to change things around. So that's just something to keep in mind. All right, my next one. Apple is breaking a 15-year partnership with Intel on its Macs. Here's why. The reason why we didn't get too big of a bounce is because they're basically just going to their own chips. They want to shorten or control their supply chain. If they're making their chips, which actually seem to be significantly better than Intel's, which used to be the best, talking about microprocessors, cores, really read through this. It again sets apart Apple phones as a unbuggy, use it, no crashing. Really interesting to take a peek at some of this. U.S. prepares for worst 4 months of the pandemic as it stares down the darkest days yet. Not to scare anyone, but we are going to go through an onslaught of COVID cases. Again, I am still not a fan of wearing a mask. I don't think it works unless you're sick. But I wear my mask as a courtesy to others around me. I wear the mask that if I am sick and I don't know it, I won't make others sick. I've got some really cool masks that are in American flag colors and camouflage and fish ones and pro-Trump. Again, I absolutely despise wearing this thing, but I do it because it'll mean something to someone else, not myself. And someday, who knows, I might have it and it might be exactly what protects other people from something I have that I don't even know. Is it a big ask? You know, it kind of infringes on my freedoms. Not really. It's annoying, but it's not a big ask. And at the point where we're going, where someone's going to say, you know what, masks haven't worked the last 6 months, I think people haven't worked. I think people didn't do enough to maybe try to protect themselves. I don't know. This is probably something else I should have you hear Maud say and Dr. Gupa say. They are big into the masks. It doesn't hurt anything, and it can possibly only help, especially if someone has it and they're spreading it. Less germs, you know, maybe it'll kill that person off because they don't have enough oxygen. I don't have a good answer. But I do think the answer is, if you want to believe in science, there you go. The science is actually proving that it does slow the spread of the virus. Just do it. Just do it. Go buy some good ones. For 20 bucks, you can get 5 really cool ones that say, "Go Trump," "Don't touch my guns," some weird skulls, the American flag. I just would hate to see someone get it if I was to pass it on to them. I would hate to see someone spread it to one of my kids. All right. Where are we going next? Morgan Stanley names internet companies that will be hit by China's proposed anti-monopoly rules. Just to see what will be coming down the line from the new Pacific trade agreement and how China's now going to give a crap about anti-monopoly rules. Read through it, see if your stocks are in there, see what's going to happen. Be careful. Don't invest in a lot of China, period. What a Democratic SEC looks like and what it mean for markets. Again, a little bit different, not on who's going to be there, unless I put the same one in twice, which I didn't think so. Nope. Another different view of the SEC and what's going to change. Taxes that's going to be coming in, new regulation, higher fees for investing in the stock market. Take a peek at it just to understand. Again, it's not set in stone. It's just getting an idea how people lean one way or the other. And last but not least, Biden co-advisor says U.S. down lockdown of 4 to 6 week can control pandemic and revive economy. Probably not. Probably going to kill it. But again, I'm trying to give you guys some ideas of what you're looking for so you can start to see when we might take protection on and off a couple times here. I'd rather try to protect and overprotect again one more time right now, just because of where our economy seems it could be heading. If some things hit the fan and we just take a big dive down, hopefully I've taught you, if anything, over the years or decades for some of you, man, if our market loses 50% of its value, what an amazing portfolio you're going to have 2 to 3 years from now. If things just tank like no tomorrow in the next 6 months, it's all Trump's fault, in case you didn't know that. And if it takes off, it's all Biden's fault. But if things really hit the fan, it's time for you guys to literally cheer for a 50% drop, because a 50% drop will be life-changing to come close to doubling the share count in your portfolio. We've seen a 35% drop, and the sad thing is We saw a 35% drop in our market when it was a fourth of as bad as it is right now. I think when people realize that we won't have the amount of vaccines to take care of everybody, which we probably shouldn't have had that expectation in the first place. I mean, we got 8 billion plus people on our world, right? When we don't have enough flu shots / vaccines to take care of everyone, we're going to look at a pretty rough year next year. Don't be surprised if the market takes a drop down. It's not because of Biden. I'd like you to say that. I'd like you to believe that. That's not the fault. The fault is we just don't have enough of the vaccines that mass people aren't going to get it still. And it's probably going to look much worse 4 months from now than it is right now. With that said, any comments? And again, Maud, you're here. I don't think Dr. Gupta is, but if either one of you would like to make a comment in regards to that, please let me know so I can get it out to the group. You guys have more common sense and knowledge and firsthand experience than the rest of us do. But be ready for another drop coming up. And it will most likely will be blamed on and will be because of the virus. And man, both you guys are killing me. And the short answer is be ready for it. Guys, just so you know, just everyone wear a mask, social distance, and wash your hands. Masks work. It works. Just do it. So there you got it. I'm wearing a mask. I have been wearing a mask since June. Again, I'm not going to say it's begrudgingly because it is. But again, if I can help someone else feel more comfortable, it's not a big thing. I've got some that are fun to wear now. If I'm sick and I don't want to pass on to someone else, I'm going to do it because I'm just not ready to stop living in the world right now. It's really hard to do that. Guys, have a wonderful evening. Take care. We got a couple more things here. For the market, if there's a draw, okay. I think the vaccine is not that relevant for the market. I wouldn't think so either, ADP, but it's really been moving on vaccine news as of recent. If there's a drop, it'll be because the amount of unemployment all over the world will be significant. One, central banks will diminish throwing money, my guess. Yeah, I mean, wow, what an eye-opener to see how much of our own debt the Fed is buying right now. We are just riding away the value of a dollar to buy our own debt. $284 billion last month. I don't know if China realizes or the United States realizes, but once we stop buying each other's debt, the game is up because we're all doing it. We're all trying to inflate away the expense of borrowing. And when we do that, we really do or will have another Great Depression that'll make our first Great Depression look like nothing. Man, what an opportunity just to ride puts and make gazillions of dollars. They might not be worth as much as they were before, but certain things do come around, and it'll be interesting to be, if you understand the power of puts, a Great Depression will scare you, but what an amazing opportunity to make a ton of money and really put it to hard assets, pay off homes, buy land. Man, a Great Depression could be amazing to set people with the use of options up to set themselves up for the rest of their life. And it won't be a Great Depression just here for the United States. It'll be a world depression. In all honesty, Japan has shown it. European Union's in trouble. It's amazing how much China's in trouble. Everything's going to go down, and pretty neat that we still live in the best neighborhood and have the best house in kind of an awful neighborhood right now. All right, guys. Hey, have a good evening. Dr. Gupta, I will call you in like 7 minutes. Gonna get a quick glass of water. I'm gonna send you a link. Guys, have a great evening. Thank you, Maud. I appreciate it. Thank you, Dave and David. Appreciate some comments coming in from you too. Thank you very much. Greatly appreciated. And that way people can hear comments or thoughts from someone other than me. Guys, take care. Have a good night. Talk to you. See you tomorrow night. Goodbye.